Continued growth in Cyprus residential values. While the second half of 2022 recorded an upward trend, while there were signs of a downward trend in supply. The pullback in investor appetite due to the higher cost of borrowing and availability of other investment opportunities in bonds and stocks. Demand in the property market during the second half of 2022 recorded an upward trend, while there were signs of a downward trend in supply. I am increasingly seeing a two-tier market evolving, island-wide, both domestically and from abroad, each having its own characteristics and drivers. Inflation and the higher costs of borrowing continue to affect local households, whilst foreigners, typically earning above average salaries, are driving the top end of the market. Although the property market remains resilient according to the latest results, the more challenging the macro environment is, it is likely to gradually have some impact both on activity and pricing. The upward trend of construction costs has begun to slow down, albeit still at a high level. However, increasing inflation and supply chain issues are still expected to affect the real estate sector. Forward-looking expectations have not actually shifted in the face of the uncertainty driven by the global energy crisis, with demand indicators still showing a positive trend. The second half of 2022 shows a tolerance of the increasing trend in property values, with notable increases in Limassol and Famagusta in almost all categories, showing of the upward trend in prices of the residential market. The best performers are again apartments, whilst offices following. Retailing and warehouses exhibited small adjustments, with insignificant decreases demonstrated in Paphos. KPMG reports increases in the values of most property categories in Cyprus Property Index. Residential continues to be a strong performer, with the trend in both houses and apartments solidly positive. Prices for apartments rose 11.5%, compared to last year, houses by 7.5%, while the prices of holiday apartments rose by 7.5% and holiday houses by 7%. For the commercial sector, all categories have shown increases, to a greater or lesser extent, with offices at the top end of the spectrum up by 8% and retail recording the most modest gains. However, the prices of retail premises increased by 2.5% and warehouse by 4.5%. Rental values increased by 16% for apartments, 17% for houses, 9% for offices, 16% for holiday apartments and 6.5% for holiday houses, and only 2% for retail and warehouse. As far as rental yields are concerned, the rental yield for apartments is 5%, for houses 2.8%, retail 5.5%, warehouse 4%, offices 5%, holiday apartments 5%, holiday houses 2.5%. The increase in the cost of borrowing, due to the rise in interest rates, as well as the corrosion of incomes due to inflationary pressures, are expected to reduce demand, but without necessarily reducing prices. We are still away from seeing a return to stability, as the landscape around the global economy and geopolitics keeps shifting. Please subscribe to my channel and click the bell to get alerts when a new video is posted. You are welcome to write your comments, questions, or concerns you would like to share.